What's up, y'all? Welcome to the next episode of the Betterwallet podcast. Today, we're going to have Jeremy Schneider on the line from Personal Finance Club. If you don't know who he is a self-made multimillionaire that has been able to grow his wealth not only by building and developing and then also selling his own businesses, small businesses, but also investing in the index funds. Jeremy has been featured on CNBC, Business Insider, Investopedia, and so many more different publications where he goes and he talks about his financial strategy. As I mentioned, he is a multimillionaire, so there are a lot of agents that come his way talking to him about life insurance or trying to get him into life insurance. And unfortunately, with the topic of life insurance, there are a lot of predatory agents out there that try to find people to buy life insurance so they can get the commission, but the value of the life insurance policy isn't what the end consumer believes it truly is. Because of that, I wanted to make sure that we unraveled that and we demystified that topic of life insurance, because life insurance isn't as bad as you might think it is, but you want to make sure that you're getting into the right policy that makes sense so you're not wasting your hard-earned money. So during this episode, we're going to talk about what life insurance truly is. We're going to talk about the difference between term and whole life insurance, or permanent life insurance is what some people might call it. And then we're also going to talk about the different red flags to look out for, because we have all had some life insurance agent come up to us and said, hey, like, you should consider life insurance, or you might have seen it on the internet over the last couple of years. So let's demystify the topic. Let's go and figure out what is the actual best way to get into life insurance in order to either build wealth or protect your family. So we're going to get into that within this episode. I can't wait to jump in. But before we do, please, guys, in the show notes, you can download my free financial checklist. In that checklist, I give you 21 different ways of going about improving your finances. I know when I first started off, when I had my first job, I had no clue what to do with my money. In fact, I actually did know what to do with it, and it wasn't the right things. I was blowing it on things that I shouldn't have been blowing it on. So I wanted to go build a checklist for how you can go about getting your finances together step by step, brick by brick. That's completely free. Check the show notes and download that today. With that, let's get into the episode and talk about the right way to get into life insurance. With that, we're going to get into the episode, and I cannot wait to see what comes out of it.
Welcome to the Betterwallet podcast, a podcast where we talk to everyday people who have changed their lives through managing their money. We talk about their money journeys, the good, the bad, and the ugly.
Welcome, everyone, to the next episode of the Betterwallet podcast. As you guys know, the Betterwallet podcast is all about demystifying the topic of money and sharing powerful money stories from people who truly beat the odds. Today, we have my guy, Jeremy Schneider, on the line. Jeremy is the founder and owner of Personal Finance Club. If you do not follow them, please give them a follow. I'm going to make sure the link is in the show notes. And Jeremy is someone that I have to give my flowers to. I mean, if it wasn't for Jeremy and his page, I wouldn't have started. I probably would have waited a long time to start Betterwallet. But in typical Jeremy fashion, when I reach out to him, he had no reason to respond back. I was just some regular person. And he responded back when I asked, hey, like, I want to create something like Personal Finance Club. And I was like, well, I'm going to wait until the end of the year. He was like, why don't you just do it now? In typical Jeremy fashion. And next thing you know, I started it. And luckily, that was right before the pandemic. And then the pandemic allowed me to kind of take off. So I was able to catch that wave. That was like one of the only good things that came along with 2020. But Jeremy has, become, more of a mentor, a friend, someone that I really look up to. And then hopefully one day Betterwallet can be something as close to Personal Finance Club, because he's completely killing the game. One of the bigger thought leaders within the space. So welcome to the podcast, Jeremy. Welcome to the Betterwallet podcast.
Thanks, Mark. I mean, credit goes to you, because I feel like I give that kind of advice to a lot of people, and usually with horrific results. And so yours was actually a success story. And so I guess, yeah, no, I mean, honestly, credit goes to you, because it's like easy for me, just like, oh yeah, just get started. But you did, and now you're crushing it, and like on your way to passing me. So yeah.
Hopefully. Yeah, no, it's been quite a journey. And yeah, you definitely have the doers out there, and you have the people who are the thinkers. And it's one of those type of things where I was like, I want to put pen to paper. I want to make it happen. And, for anyone who is thinking about creating a page or creating a business, you just start small and you look up to people like Jeremy, who has already done it, and you kind of follow their steps. So thank you for just responding back to that DM and continue to be like a really good friend, though you went to Michigan. It's a long story.
Anytime.
So tell the audience a little bit about Personal Finance Club and how you got started.
Yeah, I mean, my quick story is I turned down a job offer from Microsoft coming out of college and instead decided to start a small company, and I grew it for 12 years. I sold it when I was 34 for just over $5 million.
Wow.
And then at 36, I quit my job and basically I had about, my share of that $5 million after taxes was about $2 million. And then after a couple of years of working and growing in the market, because I invested in index funds, it was worth about $3 million. And I figured that was enough where I would never need to work again. And so I quit my job and then kind of, retired in quotes at 36 and did nothing for a year. And, I did what you thought you're supposed to do, which was just like go on vacation and have fun. But then I found out that like I kind of was lacking purpose and I wanted to work on something else. And so my passion was and still is basically helping people with money, helping people figure out the basics of personal finance, investing, Roth IRAs, index funds, like all this stuff that is scary and intimidating to people, but really isn't that hard to figure out if you just have someone who's a little more experienced who can walk you through it. And so that's when I started Personal Finance Club. Yeah, I started a empty Instagram account in 2019 with the goal of getting 50,000 followers, and
You're about
post
to
every
get
day.
to 500,000.
Yeah, I'm almost to 500,000 now, and then
That's
I'd really like to
crazy.
get to 5 million. I need an M after that number, but
There you
yeah,
go.
slow. But I guess it feels slow, but like they say, overnight success takes about a decade, and I'm about 4 years in now. So I think maybe I'm on my way to a decade of overnight success, but still have a tough 6.5 years ahead of me.
Yeah, it's one of those type of things where I felt when I first followed your page that you were doing this for more than a decade. So I felt like you're light years ahead of everyone else because your graphics are great. It's like really straightforward. And I feel like I could learn something from your page every single day. And I remember maybe about a year ago, you posted that you started, 4 years ago, or I guess less than that at that point. And I was like, wait, like you haven't been around, like you weren't back, back in 2012 or 2010. You're like, no, like I started not too far away from like when you started. And I was like, oh my God, like he's really crushing it. So thank you for all that you do. I know that I have, always looked up to your page, even when I didn't have my own page and I was getting my finances together. So keep doing what you're doing. But today we're going to talk less about Personal Finance Club and more about life insurance policies. Jeremy and I are very passionate, I'll use that term, about life insurance and doing it right. So I wanted to make sure Jeremy came on the episode to help us set the record straight. For me, I used to be a financial advisor, and during that time, we learned that life insurance was very much a part of the financial plan, but it wasn't the financial plan. And I love that Jeremy doubles down on this, where he is very clear to say, hey, like, whole life insurance probably isn't the best for most people. Let's consider a term. So we're going to go through what that all means, what you want to look for, different red flags, and we're going to, again, set the record straight when it comes to life insurance. Before we get into that, we're going to go into our icebreaker question, which I feel like we don't even need an icebreaker question. We know each other, but I have to keep with tradition because my audience will kill me if we don't. So the first question, and I feel like it's really, it goes along the same vein with like what we're about to talk about, but what is your biggest financial pet peeve?
Ooh,
Like,
maybe
like so many.
I know. I mean, maybe it is the insurance thing because at least, but we'll probably, I don't know, just spending more money than you make, I think, is the big one because
Mm,
I think you can get so academic and nitty gritty and fine tuning about all the finance things. And at the end of the day, it's like there's a set of people who spend all the money or more money than they make and they live a life being broke or in debt. And there's a set of people who spend less than they make.
yeah.
And if you spend less than you make, you're going to be, dramatically better off. I think investing is an important second piece of that pie where you have to like spend less than you make and invest the difference to actually like build wealth. But yeah, if you're just spending every dollar going on credit cards, like buying new cars, trips you can't afford, housing you can't afford, you're just living a stressed out life. And yeah, it's not really a
And
pet
you
peeve. It's more
constantly
of
feel
like
like you have to like work for your money.
then you're just putting yourself on the mouse wheel rat
Yeah.
race for all of your life because you're just working to pay for the stuff you already bought, and then you just
Yeah.
keep buying more to make yourself feel better, and it just gets this like this cycle. And I think everyone, like people who are there, are like, oh, but I want to enjoy my life, and I'm like, you're not, you're enjoying your life less because you've
Right.
talked yourself into this like little endorphin boost that you get when you buy something is happiness, but it's not. It's just like leading you to more stress. So you
Yeah.
should be spending less, and then you'll find like more long lasting happiness.
Yeah, I found that a lot of the materialistic things that I've ever bought over my life, it's very fleeting. Like the joy is fleeting, where you buy it, it's cool for a week, and then afterwards you're just like, oh my God, like, why did I buy this? And now that I've been investing over the years, it's that opportunity cost of not putting that money into index funds that I now think of, where I'm like, I could go out and buy a $10,000 Rolex, but like I much rather put it into ETFs and mutual funds. So over time it can grow and I can do things with it that I really want to do that brings me more joy than having some watch that I probably won't even use to tell time. But you're totally right. And for the audience members, you guys know I talk about that all the time. You want to widen the gap, try to increase your income, decrease your expenses. But you've heard it from a millionaire who could probably spend a bunch of money if you really wanted to, that it's extremely important to spend less than you earn. So cool. That's one of my big pet peeves as well, as you probably can tell. But let's jump into life insurance. Let's start off with the basics. How would you define what life insurance is?
Yeah, life insurance at its core is a very simple idea and a very simple product. People who have someone who depends on their income to live are in need of financial security in the case of their untimely death. So generally, we're talking about parents. It could be guardians, or it could be, there's other situations where someone depends on you to live. But generally, we're talking about parents. And so, if you're a parent with like a young child, and that child is eating because you're going to work and feeding them, if you were to die, that creates a financial catastrophe. In addition to being obviously like a emotional and tragic event, it creates a financial tragic event as well. And so life insurance is this idea where it's like, okay, everyone in the situation who, if they died young, would create a financial problem, chips in a little bit of money, pays your premium, $50 a month, whatever. Then, and it just turns out statistically, people don't often die between the ages of like 20 and 60. Like pretty rarely do people die in those years. And so therefore you can put in a little bit of money, like $50 a month. And then if you do die, your beneficiaries, your spouse, your children, or whoever, get like $1 million, like a lot of money to basically replace that income that you would have earned up until the time when your child is grown and on their own.
And tax
And
free too.
right. And the US government has said, you know what, we don't need to be like, kicking people when they're down, so that, life insurance payout is tax free.
How
And
generous of the government.
right. And so that's it. It's like a really simple idea. And some important things to note there are, not everyone needs life insurance. Like I don't have life insurance for two big reasons. One, I don't have kids right now. I don't have anyone who depends on my work to live. And
Mhm.
so there's no need for me to buy it. If I were to die, it wouldn't be a financial problem for anyone. In fact, it'd be a windfall for my beneficiaries. And the other reason I don't need life insurance is because I already have a lot of money. My net worth today is about $4.5 million. And so if I die, like my brother and my cousins, actually, I don't even know if they know that, but
You can add
send
me
out
in
a
there,
podcast.
Jeremy, if you want to. If you're looking for
Yeah,
anyone, just throw me on.
you. Yeah, anyone who smiles at me during the day, I just throw them on the list. I'm like, all right, you get 100 grand, you get 100 grand.
There you go.
So yeah, it'd be a windfall for like my young family members. And so
Mhm.
there's no need for me to have life insurance right now. And also there's no need for you to have life insurance once your kids are grown. And so I think some people think life insurance is like, there's like some teacher wagging the finger like, oh, you should always have life insurance. But like, no, it's just a tool to cover you during these like very tenuous years where you have young children, they're depending on your income. Like let's say you're 30 and you have a 5-year-old. When you're 50 and you have a 25-year-old, suddenly if you die, your 25-year-old, and plus when you're 50, things have probably changed. Like you've probably been investing for 20 years, you probably have a little bit of a nest egg. Suddenly it's not like this critical thing that's in need of protection. So at its core, it's simple. Not everybody necessarily needs it depending on your situation. And it should be pretty cheap because again, not many people die when they're young.
Right. Yeah, no, really good points. And I think with life insurance and why it became a bigger topic is because of the social media streets that we work in, right? So you have Instagram, you have TikTok now, where I feel like there's a lot of misinformation that's spread about life insurance. So, what are some of the things you've maybe heard about life insurance where you're just like, that is absolutely not fucking true?
Yeah, so unfortunately, the rosy picture I just painted of this simple product that's inexpensive, easy to price shop, only necessary during certain years of your life is not what you hear from people on social media. And when you
Yep.
hear these things, it's exclusively coming from insurance salesmen because
Yep.
insurance companies looked at this product called term life insurance. And again, the one I just described, it's you buy it for a term like 20 years or something. And then once that term is over, once you've covered yourself for that period of time, then you don't need it anymore. So you stop paying for it. Everything's good. But the life insurance companies were like, hey, instead of $50 a month, what if we charge people $500 a month? And we, instead of calling it term life insurance, we call it permanent life insurance. So you get paid out no matter what, no matter when you die. And we create some sort of Frankenstein product where instead of just this very simple, if you die, you get paid out thing, it's also accumulating a cash value. It's accumulating this like dollar amount inside of this life insurance policy that is based on this web of rules that we set up. And, you know, the sales pitch just gets so crazy because there's all these, again, when you watch on social media, they're pushing this much more expensive product that's permanent life insurance. And they come at all different angles. And like you and I were talking before we started recording that, like when we see these sales pitches show up, we almost get like sick to our stomach because it's just lies. It's like
Right.
fake. It's like, everything they're saying has like this hint of truth to it, but then behind that truth, what they're not saying is like the real lie.
Yeah.
And so these insurance salesmen are pushing these really crappy products to unsuspecting young people who think that, and they're basically pushing it not as life insurance. In fact, they always say to minimize the death benefit because it's not about the life insurance, it's about the amazing investment opportunity,
Which
even
is
though
not.
it's not, and they're not even allowed to be selling investments. Like they talk out of both sides of their mouth. They say it's not about the life insurance, it's about the investment opportunity, but it's not an investment, which is why I can say this on social media or whatever. But yeah, it's devastating, the stuff they're selling.
It's definitely really shocking, and it kind of saddens me because a lot of those folks come out as being, financial advisors, right? They use that term, but a lot of them happen to be just people that talk about money that probably aren't licensed, Series 7 or 65 or whatever that you need to actually, be a financial advisor, but then they're selling these products. It takes me back to my first job out of college, happened to be at Vanguard, but I actually got another offer for Nationwide. And they wanted me to go and market their life insurance policies. And I was like, absolutely not. But their first question was, who do you know that could use life insurance? And I was like, what kind of question is that? And they were like, just give us all the names of people within your family, no matter if they have kids or not. And those are going to be your first clients,
Yeah.
right? So I'm going and I'm thinking, okay, well, I have to go to my mom, I have to go to my sister who doesn't have any kids and tell them to get into this whole life insurance policy. And I just realized that they're only in it to make money, a lot of these
Yeah, they're
companies,
just
which is
shaking you
incredibly
down.
unfortunate. And I went to the opposite side of the spectrum and I went to Vanguard, which it was very much like, hey, like only do what the client needs and treat the client right. Like don't charge high fees, which is completely opposite from the life insurance world. And I've heard that story from a lot of other people that try to work for companies like Mass Mutual, where it's like push life insurance because they know they can get like a huge commission from that. So a lot of times when we're talking about life insurance and you talked about it like with whole life insurance, they try to mask it with like different names. I feel like there's a new name that comes out every single month. So could you, for the audience, just tell people like, okay, you have whole life insurance, but like, what are the other ones where you're just like, okay, well, that's just whole life insurance, but with a different name?
Yeah, and they do, and the reason is because, again, they've created this Frankenstein of a product, and at the end of the day, life insurance is just it's a contract between you and a company, and these contracts are crazy long, like 100 pages long, and it can say anything it wants in there, right? And so these life insurance companies have, like, done the math to figure out how they can, like, make it look good, but still make like, pay these huge commissions and huge profits and all and huge fees and everything, and then, yeah, every year there's like, they've like rebranded it as a new name. And so, the umbrella that I call it is permanent life insurance. Anything that pays you out, because the concept of life insurance is you're basically spreading the risk. If you live in a nice big town and one person's house burns down, like everyone has paid a little bit of a premium, that person's covered. That way your risk is covered. But if you're paying, like if everyone's paying life insurance, then every single person's getting paid out, the concept of insurance blows up, because now the insurance company has to pay out every single person, and then they still have to run their business. And so at the minimum, they have to have their overhead, but what they're really charging is all these fees. So anyway, that's not the question you asked. The question you asked, so what else is it called? I call it permanent life insurance. It could also be whole life insurance, indexed universal life insurance, variable universal life insurance, cash value life insurance, MPI, IUL. Am I forgetting some? They seem like
I think you have them all covered. I mean, you hear terms of like, hey, you could be the bank.
Oh yeah.
That's another
infinite banking, be your own bank.
Banking, right.
And again, like it's like the sales pitch, which sounds good, but then it makes no sense. Like be your own bank. So the be your own bank pitch is like, give us all of your money, then we'll borrow. Yeah, you'll take a fee for that. Then you can borrow your own money back at a fee, and then either you pay it back or you die.
Which is wild. And I actually have a quick story. Surprise, surprise. I was at a bar this weekend and I was talking to a guy. He was a waiter or bartender, I should call him. And he was like, hey, like I'm looking to get into finance. We're talking about just like budgeting and investing, whatever. He's like, I want to start running insurance plays. And as soon as I hear the word play, I'm like, okay, like this is not a play. Like, you are going to lose money. Yeah. I think I saw something on Instagram the other day. It was like, if anyone says that they're running a play, there's a little bit of a scam in there. There's some sort of like scamming happening. But
you're either getting scammed or going to be the scammer.
Right, exactly. He doesn't have any kids. He didn't have a mortgage. There was absolutely no reason for him to actually have life insurance. And I don't know if he actually had a life insurance policy or not, but he wanted to like look into it. And we're talking about the difference between term and whole life insurance policy or permanent or whatever you may want to call it. And I was walking through the opportunity cost of like being in something like whole life insurance, where I was like, hey, like you can go into term and you can invest the money. And then we started talking about the be your own bank concept. And I was actually kind of shocked in his response when I was asking him. I was like, hey, like, would you give me $50,000 and then I charge you, I think I said like 3 or 4,000 to hold your own money and allow you to borrow against it. And he was like, yeah, that sounds like a great deal. I was like, you give me 50,000. Like, and the person I was with, like, she was laughing. You give me 50,000 and I charge you I don't know if that's like the perfect math, but like, just the fact that he was willing to give me anything more than zero to hold on to his own money.
So he can borrow it back instead of just using it. It makes no sense, but like the insurance, like the sales pitch, people like talk you into a frenzy and to have you believe it. Did you know that I bought one of these policies? I don't know if we ever talked about that.
Yeah. I remember you put it in your stories. You bought the policy just to kind of walk through it. Like, what were some of your big takeaways with that?
Well, I mean, the general be your own bank policy is just like you described. Give us all your money, then we'll loan it back to you, and then therefore you don't have to borrow your money from the bank. But it's like, no, if you already have the money, you don't need to borrow the money. You have the money. That's the whole point. You've already skipped the point of borrowing if you already have the money. But like, there's a little more nuanced argument, which is they say, hey, give us all your money, we'll invest it. Then you can borrow against the investment, thus like letting the investment continue to grow while you can still like spend some of the money or put into a new investment. So like there's potentially a theoretical math that would work there. But hidden behind that, like leverage your investment argument they're trying to make is like the fees. And so I'll give you an example. So the policy I bought was a $200 a month policy. And I think, let me look at the year here. I have the math open.
And how much was it again per month?
It was $200 a month.
$200. Okay.
And, I went on TikTok. I saw something pop up, and then he's talking about be your own bank and grow your money and, all this great stuff, like no downside risk, can't lose money, all this stuff. And so I was like, all right.
All the things you can't say when it comes to investing, by the way.
Well, yeah. And it's like fully not true with insurance either, but it's just lies. But, who's calling them out? You and I on this podcast, I don't know where the regulators are, but
yeah.
Yeah, so I bought it. They sold me. They pitched me the whole thing. Like I didn't lie at any point during the sales pitch. I recorded the whole thing with their permission, so I have like a 90-minute sales pitch recording. And then I got this policy, and I was like, told them I had no kids, I had no need for life insurance. They sold it to me, and they're like, "Yeah, be your own bank." And so, for example, like if you're 15 years into this policy, the cash value of this, so I've been putting $200 a month in for 15 years. It's been growing the whole thing. The cash value in that policy would be $40,000, which sounds good. And so their pitch is like, you can then borrow against that $40,000. So you could take out $30,000, put that down in a down payment for a home. And then you can like buy a home and then pay back your $30,000 later, or eventually die, or whatever it is. But here's the problem with that. If I was putting that same $200 a month into the index that it tracked, I wouldn't have 40,000. I'd have 200,000. And so I could take my $30,000, just spend it, not have to pay it back, and still have $170,000. So if they're saying you can leverage your $40,000 and keep that $40,000 growing as if it's 40,000, I would much rather have $170,000 growing, right? And so they crush you with fees so bad, but then like try to pitch all these like little like benefits, but the benefits just simply don't make any mathematical sense if you have a quarter of the money in there.
Right. And a lot of times, so when I was a financial advisor, a lot of times there are different ways to borrow against your money, but a lot of times we didn't talk about life insurance. It was very rare that we ever brought up life insurance, because you can use what they call a securities backed line of credit, an S block, where you could take your non-qualified dollars, like anything not retirement, and you can borrow against it. And that's what they use to go and buy homes or whatever, because it's a lower interest rate. You can keep your money invested, but no one's getting paid from that. Like maybe a little bit, but like,
and you never hear about that. Like that's a great point, because the whole, like this whole be your own bank, like tax-free, everything that they talk about hinges on this concept of you don't pay tax on a loan, but you don't pay tax. That's not exclusive to life insurance. You can, like you said, you can get a securities backed loan, you can get a bank loan. You don't pay tax on any loan because you pay it back, right? And so like all these little like sales pitches they have, it's like this morsel of truth, like, yeah, you technically don't pay tax on a loan, but you also could just invest on your own and get a securities backed loan if you want to do that.
Right. Yeah. You have to look at the opportunity cost of like putting your money into one product versus another. And a lot of times people, I feel like they don't really know how much in commissions these agents are actually making. Could you give them an idea just from the policy that you had, like in numbers, like how much are they making in the first, let's say 3 years of having is it a multi-million-dollar policy?
No, I mean, their whole point is like you minimize the death benefit, maximize the premium, but still, like again, that's just to maximize their profits. And so I don't, it depends. There's actually like you can find. So I'm not an insurance salesman. If it's not clear yet, I'm an insurance anti-salesman, I guess.
Right.
So like I don't earn commissions from these policies, but I think the generally accepted rule is like they basically get the entire first year of premiums you pay is their commission. So if you sign for a $500 a month policy, which like I hear all the time, 25-year-old childless teachers who are making 40 grand, and somehow a slick insurance salesman like weaseled their way into the school and sold them this policy with like all of their disposable income is going to this insurance like garbage. $500 a year. So they get a $6,000 commission for selling this 25-year-old teacher this crappy insurance product.
Right.
And so you can imagine like when $6,000 for making a sale is like dancing in the heads of these insurance salesmen, who often, like you said, aren't like fiduciaries with like depths of experience. They're like, they were a bartender 2 months ago and they got into this, or like, I looked at LinkedIn profiles of these insurance salesmen. It's like they were literally working at Starbucks up until they like got this job. And I'm not knocking Starbucks. Like, I've worked at restaurants, like that's legit, but like they don't have financial degrees. They don't have years of experience. They're literally like 2 months into their, just got their insurance thing from, and like you said, they're to like shake down their network of friends and family because there's these massive commissions to be made, and like they're getting paid $6,000, and of course the insurance company is getting paid too, plus all the overhead, plus all the expenses, plus like all the actual cost of insurance. Because to the credit of the product, like the insurance, the death benefit's real. Like if you die, you still get paid out, but you can get that for a fraction of the cost with term insurance. And so yeah, they're massive commissions, and I think it kind of, the famous saying that it's hard to get a man to understand something when his living depends on not understanding it really applies here, because I don't know if they really believe it, if they're brainwashed, but my view of the world, when they're currently selling it, they believe it, but once they leave the company, they no longer believe it. So once that commission check is no longer an incentive, suddenly it's not such a good deal for them.
Yeah, and they're definitely under pressure too, because when I was considering another job, they were saying, well, here's your compensation breakdown. And I want to say it was like 90% of it was commission. And the other 10% was like salary. And it was like a stupid amount, stupid as in like really low.
Right.
And that's your livelihood. You're going every single month and you have to earn your quote unquote paycheck. So yeah, you're going to go and you're going to talk to family members. You're going to talk to your family members' friends. You're going to talk to your friends. You're going to talk to your dog. Whoever can get life insurance, you're going to talk to everyone because that's how you're going to put food on the table. But you're right. As soon as they leave, they don't care. And they're not looking for, like, when they're hiring these people, they're not looking for credentials. They're looking for people who have a fairly large network. My friends that I told you end up, getting an offer to Nationwide. They happen to have a big family. They have like 11 brothers and sisters, and they have like this huge family in my town. One is an English degree, so they're twins. One is an English degree, and the other one was like in like communications. Not knocking the degrees, but why would you have them selling life insurance? And the reason why is because they knew everyone. They happen to be big time wrestlers in my town as well. So everyone knew the name. Their last name is Ryan. Everyone knew the Ryan name, and that they wanted them to come in, sell life insurance to everyone they know. And luckily, over time, I was able to convince them to find other jobs, and they're doing well now. But I was just saying, hey, like, you don't want to live trying to make a commission selling products that people don't need, because it's not going to do anything but bite you in your ass later. So for people who are like, hey, like, okay, well, you convinced me. Like, I don't want to do whole life insurance. I now want to consider term. When do you think, like, who would be the best candidate for term life insurance, or like kind of paint the avatar, if you will?
Yeah, I think it's people who have someone who depends on their income. I've heard the argument that any young person, even if you don't have kids yet, should get term life insurance because it insulates you against getting some sort of terminal illness or something where you become uninsurable. And maybe I don't hate that. I think you could make the doomsday case about any insurance or any protective product or whatever. And it's a small amount of money. Like, I don't hate that advice, but yeah, generally, young people who have kids or have someone depends on their income, and if they die, there would be a financial catastrophe left behind. And I'd say also that it doesn't need to be paid work. So for example, if you're a couple and there's one person who has a job and one person who takes care of the kids, the person who takes care of the kids, if they died, that'd still be a financial impact to the family, because now the person that works can't do both jobs and has to replace that work with, probably with money somehow, like hiring a nanny or something. I mean,
Right.
again, tragedy of a young loss of life aside. And so, basically anyone that's kind of is responsible for people, I think, and not already independently wealthy, should have life insurance, term life
Yeah.
insurance. And the general strategy is, buy cheap term life insurance. It's impossible to know exactly how much you need. Like, a ballpark rule of thumb is like 10 times your income or the value of your work. And so if you're making 50 grand a year, you might buy a $500,000 policy, 100 grand, $1 million policy. And again, we're talking in the range of 25 to $50 for young people. If you're getting quotes like $200, you probably have landed in the world of permanent life insurance, and you probably need to check somewhere else out.
Exactly. Yeah. Look for another agent. For anyone who, goes and they get a term life insurance policy, and let's say they budget for 200, but they're only paying 20 to 50. You talked a little bit about like the opportunity cost, right? Like, what could you actually do with that extra money? And you mentioned index funds. So could you kind of walk through what index funds really, I could tell them, I talk about all the time, but like what
Yeah,
index funds truly are, and
you
then
know what they are.
and what resources you have to help people invest into index funds?
Yeah, the general strategy is to, just buy the insurance you need, minimizing the cost of insurance, because you're not trying to give all your money to an insurance company, and then invest the difference. And index funds are where you and I prefer to invest because it minimizes fees, it maximizes your own benefit. It's like a direct, and what it is basically a basket of essentially all the stocks in the stock market. And so when the companies of the world, you look out your window and you see FedEx and you see Delta flying overhead and Amazon and ExxonMobil, like the companies of the world, as they're growing and profiting and doing business, the profits of those companies, the companies are owned by the index fund and it's funneled back to your bank account. And so in that example I gave earlier, if you were giving all your money to an insurance company after 15 years of paying the premium in the case of the policy I bought, you'd have $40,000. But if you were investing that money, you'd have over $200,000. And so when your term is up, then you're basically self-insured, right? So if you bought a $500,000 policy and you invest for 20 years, you might have about $500,000 of your own investments. And then the beautiful part about that money is you don't need to die to get it. You can just have it. You can spend it. You can, do whatever you want. You can retire early. And so that's kind of just the general financial best practice. Buy the insurance you need, invest the difference in index funds, low fee, simple, buy and hold. Yeah, it's the opposite of a play, like your bartender guy I was talking about. And no disrespect to the bartender guy, but I think people who get into the finance space think they should be making tricky, clever financial moves, trying to make plays, but it just turns out the actual best way to build your wealth is to keep things very simple. Minimize fees, buy and hold, spend less than you make, do it over a long period of time. And that's what actually ends up turning that compound growth, which turns into millions of dollars.
Amen. And then you could be a millionaire like Jeremy. And
look how great it is.
That's a great way to close. Jeremy, if anyone's like, this guy knows his shit, I need to follow him, where can they find you? Where can they, get more resources from Personal Finance Club?
Thanks for the plug, dude. Yeah, I'm an easy guy to find on the internet. Personal Finance Club. Instagram is where I still do most of my content creation, or personalfinanceclub.com.
Yep. And it's the only verified account, guys. So if there's one that you see that is not verified, that is not Jeremy.
There's been hundreds of impersonators. Although now you can buy the blue check. I don't know if the
which is
scammers
wild. Yeah. It's so wild. I know we were talking about it like back and forth like last year, and the fact that you can now pay for it is just blows my mind. But
yeah, I feel
that's
like
another topic for another episode.
Threw a wrench in that whole thing, and now I don't know. We're living in this like weird world where our scammers going to start buying blue check marks. I haven't seen a blue check mark scammer impersonating me yet, but I wouldn't be surprised.
Yeah, I mean, $10 to be able to scam people out of 100. Like, I mean, the math makes sense. I wouldn't do it, guys. I'm not a scammer, but never mind. I'll stop talking about that. So thanks, Jeremy, for coming on. Guys, in the podcast world, the best currency is leaving a review. So if you learned anything at all, tell me what you learned and leave a review and rate the podcast 5 stars, please, wherever you're listening to the podcast episode. And with that, we'll close. Thank you, Jeremy, again for coming on. And you guys have a great week.
Thanks for tuning in to the Betterwallet podcast. Make sure you subscribe to the show wherever you listen to podcasts. And if you found any value, we'd appreciate a rating and review.